to our first trade, and that is Nvidia. I went out to the April 17th, just 2.5 weeks from now, and bought the 105, the at the money call in Nvidia. Then I went to this week, April 4th expiration, and sold the 110 call. Now, that's a bit inside the expected move of about $6, but it's right in line with where the stock is trading versus the end of the week. So the debit, we put that in, is about $3.80. It's trading right at $3.80 right now. That's the risk on the trade. You're looking for a move now from just under 105 towards 110. You're collecting theta each day, and this is a trade that will flatten out. This is something a trader might consider. You're buying a $5 wide call diagonal for about $3.80. It will flatten out above the zero profit line. So that's a good thing about this trade. The risk on this trade, always, it's directional. It's got about 27.5 deltas. It is the downside. So this is a bullish trade. The risk being the debit paid. All right, now.
As Nvidia approaches the $4 trillion market cap, which he believes it will reach sooner than we all believe, Dan Ives is making headlines once more with his groundbreaking new prediction. Ives discusses Jensen Huang's plan for Nvidia, predicting that the company would surprise investors and stockholders alike in 2025 before reaching $4 trillion very soon. Let's examine Dan Ives' intriguing observations to see if he succeeds again or if he has lost his mind. Welcome back to the investing tutorial, everyone. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Time to bring in Mr. Dan Ives, Managing Director of Equity Research at Wedbush Securities. On a day like this, when it seems Powell is going to give us something to go with, at least to get us to stop selling, Dan, the question is, which in your list of coverage is the best buy right now?
In my opinion, this tech sell-off, I think a lot of it is more fear-driven than fundamental. And I think that continues to be what we're talking about. I mean, in Asia, demand to supply is 15-1 for Blackwell. Last time we were there, it's 12-1. So when I look at semis, you look at names like Nvidia, you look at software in terms of some of the hyperscalers, you look at names, really across what I view as sort of the AI revolution names, Palantir among them, cybersecurity. I think these are the names that you own here playing the theme. The theme is not cracking. That's more perception.
Okay. What did you learn from GTC and Nvidia yesterday and Jensen Huang? Dan, please correct me if I'm wrong. It seemed like it was generally kind of an update on themes we mostly knew about and some pretty impressive numbers of how fast their chips are running. But was there anything additional?
Well, first of all, I think being at GTC in terms of our team there, I mean, the developer feedback, it's off the charts. So I think it all comes down to the use cases, and those are exploding. In terms of Jensen's keynote, I think it's really showing the holy grail is physical AI, autonomous robotics. Clearly talking about Rubin, some other sort of initiatives down the road, but look, they own AI when it comes to from a chip perspective. And I think that is sort of planting the flag, showing that, like, despite all the fears, some of the deep sea wounds and everything else, that's sort of Jensen out there, hearing from the godfather of AI himself saying, look, it's our world, everyone else paying rent.
Okay. All right. So Nvidia then, in terms of market leadership, I mean, this thing trades at a PEG ratio below 1. So the valuation argument is not a bearish one, right?
Oh,
bullish, if anything.
I'd say it's cheap. I mean, relative, like when you look at it, if you believe, and all of our work shows that we're in year 3 of a 10-year build out, Nvidia is cheap. I mean, I continue to think this is going to be a $4 trillion and eventually $5 trillion market cap, and that's our view. I think you got to take the noise out. I mean, you've talked about it over the years. I think in periods like this, you got to look at the winners and where they're trading.
As the sector undergoes radical changes and uncertainty, Nvidia is steadfast and prepared to surpass the opposition. Dan Ives explores the data that highlights Nvidia's remarkable achievement, with Q4 revenue rising to $39.3 billion and a 114% rise in revenue from the previous year. There is no denying Nvidia's supremacy in the AI processor market. Nvidia is poised to transform the industry according to CEO Jensen's prediction that the exponential expansion of agentic AI will pave the way. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
We expect the choppy market environment to persist over the next several weeks and likely months, and we are not likely to see a quick return to new highs. I'm pleased to say that Keith joins us now. So Keith, new highs is one thing, but do you think we've seen the bottom?
Oh, that's a tough question right off the bat. I think we've seen a short-term low likely in the market, but I just think the upside's capped. And just for context, we downgraded stocks after being bullish back in late February around 6,000. And our point was that the risk-reward was more mixed. Around 5,500, at least you're reflecting some of the uncertainty. You know, when you're down 10%, you're effectively pricing in about a 1/3 chance of recession. So at least some of that bad news is priced in. But you know, at the same token, even though there's so much discussion about tomorrow, this big day we have ahead on the tariff announcement, as we look at the data itself, what we're seeing is obviously we're seeing the consensus bring down their economic forecast. That has not yet translated into profits. So we think there's some downside risks to profits and also profit margins with tariffs. Maybe one last point, that's offset by when you're down 10% historically, when you look a year later, we've had 56 instances going back to 1950. 49 out of those 56 instances, we've been higher a year later. So if I see like I'm saying somewhat neutral, is like on one hand, yes, 10% corrections is good. On the other hand, you're having some changes in the fundamental story, and we think a more neutral posture makes a lot of sense here.
Do you aren't you concerned that we get more and more negative news, economic hard data going the wrong way? I mean, we got jolts that were all wrong today. We got ISM that was all wrong today. And I mean, inflation numbers, CPI and PCE have been pretty good, but it looks like they're set to get worse and worse. The same could be said for growth.
That's right. And I think part of the market move down is a reflection that there's an anticipation that we will see some sluggishness. Now, the question becomes how much? And now, as we talk to some of our, like, say, retail analysts, they're seeing certainly some sluggishness, some slowdown in bookings for the summer. Think about hotels, lodging. I've even heard somebody talking about, a slowdown in mattress sales, which is a very discretionary type of purchase. So I think we're going to see that. And that's also why I think the upside is capped. If the market was priced, much lower, was still around the 20 multiple, I might be more interested in saying, hey, all the bad news is priced in. But in our view, you're trading at a 20 multiple, and you have downside risk to earnings. So going back to the point about where the market is, I think as we get back to 58 to 6,000, there's just a lot of selling pressure, which makes for a choppy market. And relative to where you would have been a year ago, we think a more defensive posture, or at least neutral posture, makes more sense today.
With giants like Amazon and Microsoft on its side, analysts are still upbeat about Nvidia's future despite stock price swings and impending competition. The company's prospects for long-term growth appear bright. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
A positive, Alphabet. I was pointing out Bitcoin as the fast twitch risk asset that was looking decent overnight despite stock futures down and a big bid into bonds. Tell me what you see, KG.
Yeah, Oliver, I mean, if we're setting up today's session on the intraday chart, what I'm looking at for these levels to the upside, 56.75, as far as an area of resistance, seeing some flows there as far as call selling, and then to the downside, 5,500. So looking at a pretty wide range. The first area of immediate support is going to be 55.80 to the downside. And we're getting kind of close to there. Let's see if some buyers actually really try to step in and try to bounce and continue this rally. But When you're kind of looking at it, obviously we are seeing a little bit of weight on the equities for now, and the quarterly expiration that we had yesterday, along with that pension rebalancing, kind of created maybe some advanced pricing pressures to the upside that I think, once again, we have to kind of discount for now. So overall, seeing a little bit of churn in the market, but we still have a long way to go.
Okay. I like to see the dollar finding strength overnight for basically the last week. In intraday, good luck. The dollar keeps taking its hits, but it's actually held in. And so that gives me optimism that maybe some of the tariff madness is starting to settle. Obviously, I could be wrong. We'll find out in 24 hours. Russell down about 2/3%, but big tech looking decent. Nice little bit into Tesla. Decent start for Nvidia, at least. I know you're looking at liquidity, too. Tell me about what's been happening kind of underneath the surface of these moves, Kevin.
Yeah, so yesterday, once again, we had a pretty decent intraday turnaround to the upside, but liquidity, if you're looking at the E-mini S&P 500 book depth, actually did move lower. So lower liquidity, advancing prices kind of signifies that we might have seen a little bit of a short covering event here. And once again, when you have lower liquidity, you could see a greater price volatility in the market. And so I think that's another reason why we have an elevated VIX, which is sitting at around 23, 24 right now, which is implying around a 1.4% move either to the upside or downside. Now we've had, have and continue to see lower priced vol compared to realized vol. And if that's going to continue, then, buying options, it's not a recommendation. Buying options has been a fairly fruitful strategy, no matter if you're going long calls to the upside or going long puts to the downside here. But you'd like to see liquidity actually increasing and book depth actually increasing to give you a little bit more footing and a little bit more confidence that this price action that we saw yesterday could actually hold.
All right. That is the question here. Can we add on to yesterday's second half strength, or at minimum hold it? It just really seems like we would love some follow through, but I understand that maybe there could be a lid with a lot of headlines expected to drop tomorrow. How do you think that plays out, KG, in terms of like timing, in terms of the way we're going to get the news flow over the next 48 hours?
Yeah, I mean, I think half the market probably believes that it's going to be a clearing event, meaning that we take off maybe some of this uncertainty in the market, and that could also create a little bit of buying pressure when it comes to equities, and then also maybe selling pressure when it comes to yields. What I am looking for this morning, though, when you're kind of looking at the 10-year, 3-month spread for treasuries, we are actually inverted, and we did invert overnight here. And if you kind of look at it on the daily chart, that zero line that I have highlighted there, once the price of that blue line goes below that zero line, that means that we are inverted. And then also, if you kind of look at that bull or the bear flag that we had, basically trend line has been to the downside, but we had a counter trend rally to the upside. That 10-year, 3-month treasury spread actually made new lows, or is making new lows right now, where the S&P 500 is making higher lows for now, right? Just based on yesterday's price action. And we have a very strong correlation between the two. So I'm looking for that correlation to really try to recorrect over the next 24 to 48 hours. And that could, once again, lead to bonds maybe being sold off. Maybe that's a risk on sentiment. Or the other way around, we actually have equities kind of seeing some more pressure to the downside. And yesterday, once again, being more of a discounted type of an event
Very good.
For the market.
Great observation. I will, to be like, you're going to like this from coming from my perspective, because you're usually the like every tick. If you go to the candle for the TNX minus IRX, we're still in the realm from March 4th, so we haven't quite broken through the lows of that session. But I love that you point this out, because it's a point I was making all first quarter. You don't want to see compression in the yield curve. People were freaking out when it was steepening because they've got this reaction from 2022 to not like bonds selling off. But this has been a real crucial point, is you got to root for that steepening at this point. So the fact that we are about to break to new lows on that spread, I mean, that is pretty distinctly bearish in my mind.
In an unpredictable market, one thing is always very clear. The potential of Nvidia is limitless, and the company's path to a $4 trillion market valuation beckons, giving investors an experience of a lifetime. What do you think? Finally, leave your comments below. If you want to see what companies like Nvidia have been up to lately, click the next movie on your screen. I'll see you there.